We're really seeing an impress investors. I want to get your take on it. They increased CapEx by 81%. At the same time, we saw margin expansion. That's pretty tough to do at the same time.
It really is, and the CapEx number was very important. And now that we're through the big CapEx spenders, the cloud spenders, you can see that they are all still focusing on CapEx and spending huge amounts of money. And the comments that Jassy made about the possibilities for AI and generative AI and their focus on that continues to mean that story continues to run. That should be good, a good read through for Nvidia, which will be the last of the Mag 7 to report.
We've all heard of OpenAI and ChatGPT, which really kicked all this off at the end of calendar 22. And obviously Microsoft has a huge stake in OpenAI.
Amazon's earnings impressed despite cloud misses, with strong profitability and steady sales driving stock gains. The company's 81% capital expenditure increase and margin expansion highlighted its focus on AI and cloud growth, boosting investor confidence. Amazon Web Services outperformed peers, with accelerating growth compared to Microsoft and Google. This solidifies Amazon's dominance, even as questions arise about returns on AI investments across the tech sector. Overall, Amazon's strong performance and future-focused strategy position it well in the competitive tech landscape, offering optimism amid mixed results in the industry.
What did you think about what you saw? And I thought it was pretty interesting. Cloud actually missed estimates, but still we're seeing the stock move higher.
Yeah, that's right. Amazon did have a couple of blemishes, and after yesterday, you might have thought that anything was going to get punished, but not Amazon today. And I think a lot of that had to do with the profitability of the company, which was the big surprise in the quarter, is that just a huge amount of profitability on the bottom line. And I think that gives investors a lot of comfort. And the sales numbers were decent. They were very close. So no surprise that stock is up. It also hasn't been one of the biggest performers of the Mag 7 or of the technology area. So some room to go for them.
In the case of Nvidia versus an Apple, I think you obviously have two stocks where I would stay with Carter, and I just don't think the expectations in Apple are that great. Nvidia, we know they're great. And so now we've dealt with some production issues. We've had the company come back and pretty much reassure fourth quarter demand, they're saying is going to be extremely strong. And I get back to the stock, and I get back to even some of the market dynamics that have made Nvidia an outperformer, in addition to those ones that are obviously Nvidia specific. I think the macro supports Nvidia. I think it supports the names where you have growth, and I think the market is less worried about that multiple here.
Sarat, Nvidia is going into the Dow. We learned that news the other day, and that's going to be Friday before the opening bell. Just give me a thought on that. If we talk about the influence of a Berkshire selling, then influencing how the stock trades as it relates to Apple, what does this mean for how the stock trades as it relates to Nvidia?
I think it keeps its momentum. It's the relevance. It's taking Intel out, replacing with Nvidia, and basically saying, hey, this is a company that's going to be there for a long time. Now, you're not going to get that positive tailwind that if it came into an S&P, because there are not that many people that buy the Dow index. But the relevance of this to show that, hey, these products are going to be here for a while is really good for the stock.
All right.
All right. And Nvidia now briefly pulling ahead of Apple in the market cap race. And there you see it's what, 3.389 versus 3.382. Wow. It hasn't closed above Apple on that metric since June. So Nvidia doing very nicely. Thank you very much. But neither are suffering, I wouldn't say.
It's impressive.
In market cap. And
we are back. Most mega cap names lower following last week's earnings reports, with the exception of Nvidia, which has not reported yet. Those shares are rising on news the company will join the Dow this week. Here to share his view on the Mag 7 is the Dean of Valuation himself, Aswath Damodaran of NYU Stern School of Business. Welcome back. It's nice to see you again.
Thank you, Scott.
As a shareholder and an observer, and both are valuable to us, you've had a chance now to digest these. What's your takeaway?
I think that these companies have become really good at playing the earnings game. I mean, you look at them; they look at the expectations. They come in 2 to 3% above. At this point, you're wondering why even bother with the expectations. They're going to beat it by 2 or 3%. I think the real story, though, is deeper in the earnings reports, and I think you see it play out with, for instance, with Microsoft. The recognition that AI's products and services, the potential is there, but the promise is not being delivered in terms of monetization. So I look across the companies, no blowouts in either direction. But I think in many ways, what you need to be looking for is a change in narrative, and it's not coming right now. It's pretty much the same narrative that's been running them all year long.
Have you sold any of your own positions in these names? I just like to keep our viewers up to date, since, as I suggested, you're an observer, but you're a shareholder in many of these names too.
I sold half of my Nvidia about a year and a half ago, but since then I haven't traded down in any of them, and I haven't increased my position either. I feel pretty good about what I have because I frame it in terms of what I originally paid for these stocks, not what they traded at their high 3 months ago, 2 months ago. So I'm okay with where I am, and that's the only thing that I have to be as an investor, is to be okay with my own decisions.
Well, that's why you're a professor of finance at the Stern School of Business, because you got into those names early. What about semis? Yeah. We mentioned Nvidia, it's, pushing Apple right there on the top of the market cap chain. It obviously has had an incredible run, but not every stock is in Nvidia in this market. No, how are you judging the semis?
This is the one place where I really think you've seen, and this has really been true all spring into the summer, into the fall, where you've seen leadership really fracture or split. We know how good the Nvidia chart is. We know how good Broadcom has been. Where's AMAT? Where's Lam Research? Where's ASML? Where's Samsung? It is, of what is perceived as leadership, I think it's the faultiest of that. It's the weakest under the surface. Only 25% of semis are actually above their 200-day moving average here. You do get some good seasonality with semis the next 4-6 weeks. I think if you got a bounce, I'd be more inclined to fade that bounce in semis than I would be chasing.
I asked you earlier about Berkshire selling Apple, so let me flip it and ask you about Nvidia now and the inclusion in the Dow and how you're thinking about that based on what you've seen through the years.
Yeah, I mean, obviously, on some level, the inclusion of Intel previously and not having a play on Nvidia, which is 7% of the S&P 500, probably just made the Dow feel a little bit unrepresentative of the economy right now. Now, you could definitely make the case that it's just grabbing onto a high momentum play way after the fact, after its greatest gains. I was just looking at the Nvidia versus Apple equation in terms of, market cap neck and neck right now. Well, Nvidia has about a third of the revenue in the coming year and about half the net income. So you could obviously say it's a more expensive stock, but it's growing so much more quickly. So in the short term, first of all, there's no brand new reason to buy a stock because it's in the Dow. History says that's not at all a reason to buy. There's not a lot of money indexed to the Dow. It's much more about, the way that it's validating its current role in the new tech economy, which we sort of knew already. So again, I don't think it's a sell the news. Maybe it's a buy because of the capitulation on Intel. But at this point, it seems much more about the Dow trying to stay relevant.
If you look at the numbers, though, from Microsoft, their June quarter, Azure, which is their cloud business, was growing 35%. Then that went to 34% in the September quarter, and they guided to 31 to 32. So the numbers are going down. If you look at Amazon, their cloud business has actually accelerated over the last 5 quarters from 12% to 19% growth. They're the biggest. And if you look at Google, which is the smallest of them, their growth actually accelerated from 29% last quarter to 35% in the quarter they just reported. So you've got to ask yourself, is Microsoft actually getting a return for all of this money that they're investing, when if you look at the numbers, they've actually gone down over the last 6 months. So that's the one that should concern you, and especially when you marry that with the valuation, where you're talking about a 33 PE, and the market, by the way, is trading at 24 times, that's the one that should give you the most concern, I think. The second one is obviously Apple, which you go, the company has grown revenues cumulatively, if you include this year, calendar year, at 5% over the last 3 years. And every product, people go, oh my God, Vision Pro is going to be terrific. And then you figure out, no, nobody's going to wear ski goggles on their head. And then you look at what's going on with the iPhone and the features that they've rolled out, which surprised me, they weren't particularly good to start with. They're going to get upgraded in December in the US, but then you have to wait for next year for it to get upgraded in the rest of the world. And you've got a company that's also trading at a 33 PE for 5% revenue growth over the past 3 years combined. And so that's the other one where if people finally go, you know what, the problem isn't this, it's market share losses to people like Huawei that have resurged in China, then that multiple could come down, even though you continue to do, low single digit to mid single digit growth, which is what they guided for the December quarter.
I asked you about macro, if there was ever an economic slowdown, maybe there never will be one, but I'm just wondering which companies are dependent on a strong economy? Are they dependent at all, any of them, on a strong economy?
Absolutely. I mean, the darling of this is obviously Nvidia, and we think for the next 3 to 6 months they'll be fine. Yeah. But if you think back to COVID, what'd you see? Well, when COVID hit, we all had to get back online. And so Nvidia's revenues surged to up 84% year over year at the beginning of 2021. Then when we all went out and did things and the hyperscaler demand slowed down, Nvidia's revenues went from being up 84% to down over 20 as they had to absorb all of that spend. Right. It's the same thing with AI infrastructure, where I think, as you get to mid next year, they'll have to absorb that spend and revenues are going to slow down.
If you look at Nvidia today, if you look at semiconductors, so from that high on June 16th, June 17th, it was a 21% pullback in the semis. We're now up almost 10% since the lows on September 6th, and that's also with higher rates. And I would just say, if you look at a chart at Nvidia or the semis, you can see that ultimately they did bounce off the bottom end of that uptrend. And I'm sure Carter's got a view on this. I just get back to the leadership that the markets have looked for on the index level is something that's come from semiconductors, and that's then led the NASDAQ, which has then led the S&P.
And meantime, shares of Nvidia up nearly 3% today for its fourth straight day of gains. It is now up more than 40% from its August 5th lows, less than 10% from its all-time high. The chipmaker kicking off its 3-day AI summit this morning. Morgan Stanley reiterating the stock as an overweight rating. Guy?
I think it was a super micro move if you throw that one up. But, we've talked about this. I think Carter talked about it last week. You're in this pennant formation in Nvidia. It's going to break one way or the other. Today it shows signs of breaking to the upside, but I still think this pennant is intact. The June 20th level, the formation that Tim sort of alluded to, I think the stock closed above 140 that day and reversed. That's interesting. It's not been broached yet. So the question is, which way does it break? Is it going to break to the upside out of this pennant or the downside? Today's action suggests the upside. We'll see, though. It's not there yet, Mel.
Amazon's earnings showcase strong profitability and strategic investment in AI and cloud innovation, with AWS demonstrating accelerating growth compared to competitors. These results highlight Amazon's adaptability and ability to balance short-term gains with long-term opportunities. As the tech sector evolves, Amazon's focus on growth and innovation positions it as a leader, though questions remain about the broader returns on AI investments. Will Amazon's AI and profitability focus give it an edge over competitors? How does AWS growth compare to Microsoft and Google in shaping the cloud market?